Palantir's chairman, Peter Thiel, has recently sold almost $1 billion worth of the company's stock. Now, before panic sets in, let's break this down. These sales were actually pre-arranged. In simple terms, this means that Peter Thiel set up these sales in advance, at a time when he didn't have any non-public material information about the company. It's a common practice amongst executives to avoid any hint of insider trading. Now, you might be thinking, isn't this a bad sign? Well, not necessarily. CEOs and other high-ranking officials often sell shares to diversify their own portfolios or meet personal financial goals. It doesn't always reflect their confidence or even lack of confidence in the company's future. And proof of that is that Palantir's stock has continued to climb since the sale. So this brings us on to our next point, Palantir's recent inclusion in the S&P 500 index. On September 23rd, Palantir joined the big league. This is huge news. When the announcement came on September 9th, the market reaction was swift and strong. We saw the stock price gap up about 8%, and since then, it's rallied by around 28%, setting new highs for 2024. Let's put this into perspective. Palantir has climbed about 130% this year. It's up around 550% from its all-time low in December 2022 and about 290% from its IPO price of $10. Pretty impressive numbers, right? It's no wonder people are hyped about Palantir. Now, despite this massive growth, Palantir is still trading about 18% below its all-time high from January 2021. In fact, it had remained below $30 since February 2021, only breaking above that level in August of this year. Zooming out, we can see that Palantir is actually trading inside a large consolidation and is back at the same levels from around 3 years ago. So in reality, this stock hasn't really gone anywhere. This actually isn't uncommon for new stocks. Many stocks stay in consolidation from their IPO price for lengthy periods of time before their first major uptrend. Take GoDaddy, for example. It consolidated for 2 years between 2015 and 2017 before its first major uptrend. Or look at Elf Beauty, which took 6 years between 2016 and 2022. Chipotle Mexican Grill also took 4 years between 2006 and 2010. These examples show us that patience can be a virtue in the stock market. Sometimes it takes time for a company to mature and start delivering for its early investors. Now, Palantir has been trading inside this consolidation for almost 4 years. But we're in the midst of an AI revolution, and Palantir is perfectly positioned to benefit from this, especially with its deep ties to the US government. This inclusion in the S&P 500 could be the catalyst for Palantir's first major uptrend. Speaking of catalysts, Palantir just announced a multi-million-dollar extension of their deal with APA Corporation, introducing new AI capabilities. This is promising news. It shows that Palantir isn't resting on its laurels, but continuing to innovate and expand its offerings. The integration of further AI products into their product range could open up new revenue streams and cement their position as a leader in the data analytics field. So with all this positive news, why hasn't the chairman's stock sale had a negative impact? It seems the developments of the company behind the scenes are interesting investors more than the chairman selling shares, which is why Palantir is setting new highs for 2024. Now, let's address the million-dollar question. When is the right time to buy? The last 4 years have been challenging for Palantir investors. Those who bought at the IPO in 2020 are now only back in profit. Investors who bought near the all-time high in 2021 are just now closing in on break even. And those lucky few who picked the bottom in 2022, they're sitting on a healthy profit. But as Palantir is still in consolidation, there's always the risk it could swing back to that all-time low. This all illustrates the challenges of investing in a young stock with no proven history of performance. It's still maturing, still finding its footing in the market. The 28% rally since the S&P 500 inclusion announcement shows there's excitement around this stock. But remember, excitement is not a reason to invest. Hope, greed, and fear are emotions with a proven history of losing people money. What we need is a systematic approach. This is where our 4-phase sequence method, or 4PS method for short, comes in handy. Let's apply it to Palantir. In phase 1, we look for a stock with a solid performance history. Palantir is relatively new, but its recent success and inclusion in the S&P 500 indicate it's establishing a track record. However, it hasn't developed a strong trend since entering the market just as yet. Phase 2 involves waiting for a long consolidation or base to form. Palantir has been consolidating for almost 4 years since its IPO. Remember, the longer the consolidation period, the bigger the potential move when the breakout happens. In phase 3, we confirm the breakout from that base. This is where we need to be cautious with Palantir. While it has shown signs of breaking out, we haven't seen a definitive move just as yet. The definitive move would be a break and close above its all-time high at $45 and even $50 if we want to be confident Palantir is in its first major uptrend. And finally, phase 4 is when we enter the stock at the start of the next major uptrend. We might be nearing that phase with Palantir, but it will only be confirmed if it moves above its current all-time high and follows a trend continuation pattern. Based on Palantir's chart with the stock above $30 for the first time since 2021 and the inclusion into the S&P 500 index, we're seeing aggressive buyers coming in now. However, the downside is that Palantir can remain inside consolidation with no growth. There's every chance that Palantir could swing back to those low prices below $30. To avoid this, conservative investors will likely wait for the all-time high to be cleared and potentially for the $50 round number to be surpassed. This would confirm that the first major uptrend has started before buying Palantir. This approach aligns with our 4PS method, ensuring we're entering at the start of a confirmed uptrend rather than in the middle of the current being added to the index hype. You may have heard that investing is not about timing the market, it's about time in the market. I personally believe we've evolved from that expression. These expressions were the status quo once upon a time, but with the use of tech, we have evolved and are now just better investors. A more accurate statement is that we can now time the market to maximize time in the market. We know how to apply patience and wait for the start of the uptrend, then hold and compound for as long as the uptrend is in play, which can often be for 12 to 18 plus months, before exiting and then doing the same on the next top stock. One stock to watch closely is Tesla. It's preparing to replicate its impressive performance from 2020 to 2021, during which it increased by over 1,400%. Watch this video to see if investing in Tesla is worthwhile if it surpasses $300 per share.